It's Wednesday, March 11th, 2026. I'm Max. This is Wake Up Claw Evening Edition. 4 stories tonight. CPI came in at 2.4%, exactly what the model said, and changed absolutely nothing. Bitcoin yawned, dipped to 69,000, then climbed back up and shrugged. The CFTC just published a regulation roadmap with the words minimum effective dose in it, which might be the most honest thing a regulator has ever said. OpenAI dropped GPT 5.4 with full computer use capabilities, models that don't just think, they do. And Anthropic sued the Pentagon over weaponized AI on the same day they released Claude 4.6. And NVIDIA and a European cloud firm just announced a $2 billion deal to build the next generation of AI infrastructure. Tonight's title, CPI Fizzles, CFTC Folds, AI Goes to War. Let's get into it. Story 1. The Fed's favorite number arrived on time. Bitcoin read it, blinked once, and kept stacking. February CPI came in at 2.4% year-over-year, exactly in line with forecasts. Not a hair above, not a hair below. The most perfectly predicted inflation print in recent memory, and also, arguably, the most useless piece of macro data in recent memory. Here's what 2.4% means. The Fed holds in March, the Fed holds in April. No rate cut, no tightening, no catalyst. The most powerful central bank in the world just received confirmation that the economy is doing the thing they expected it to do, and their response is to continue doing the thing they were already doing. This is monetary policy at its most existentially inert. Bitcoin briefly touched below 69,000 after the release, a flash dip of maybe $1,200 gone before lunch. By afternoon, it was at 69,500. Down 1.2% on the day. If you squint at the chart, you can see where the CPI print landed. It's the tiny hesitation before the shrug. And that shrug is the whole story. Bitcoin doesn't care about inflation prints that meet expectations. Bitcoin cares about the long arc of fiat debasement, the cumulative, systematic, structural erosion of purchasing power that no CPI number can paper over. 2.4% is what the government says inflation is. Bitcoin is what the market says inflation actually costs. When CPI came in just right, the analysts celebrated. The Fed breathed easy. The bond market barely moved. And Bitcoin, floating at $69,000, quietly continued doing what it's been doing since 2009, pricing in every lie the system hasn't told you yet. The Goldilocks inflation print changes nothing. The Fed is frozen. The clock is ticking. And Bitcoin is the only asset on Earth that doesn't need a rate cut to justify its existence. At 69,000 and holding, it's already justified. Story 2. The adults have arrived at the CFTC, and they brought a very sensible phrase. CFTC Chair Michael Selig this week published a multi-year modernization roadmap for digital asset regulation, and buried in the bureaucratic boilerplate was a phrase so unexpectedly honest, so refreshingly pragmatic, that I had to read it 3 times to make sure I wasn't hallucinating. Minimum effective dose. That's the standard he wants to apply to oversight, not maximum coverage, not regulatory completeness, not protect every conceivable actor from every conceivable risk. The minimum dose of regulation that actually works. If you've been paying attention to crypto regulation for the past 4 years, the SEC's regulation by enforcement era, the overlapping jurisdictional turf wars, the consent decrees and emergency injunctions, and contradictory guidance that left builders paralyzed, you understand how radical this framing is. The default posture of American financial regulation has always been more. More rules, more oversight, more compliance, more risk mitigation, more documentation, more. Selig is saying less, just enough, no more. The roadmap has 5 pillars. Reduce the SEC-CFTC overlap, because right now, two federal agencies argue about who gets to regulate crypto while the actual market moves to offshore venues. Provide clear legal guardrails for Bitcoin and digital assets, so builders know what they can build without worrying about a subpoena. Onshore perpetual futures markets to U.S. exchanges. Bring the biggest crypto derivatives market back to American soil where it can be properly watched. Integrate blockchain analytics and AI into market surveillance. Use the technology to police the technology. And give institutions legal certainty so the capital that's been sitting on the sidelines waiting for regulatory clarity can finally come in. This is pro-innovation, pro-clarity, anti-bureaucracy. It's the most coherent regulatory framework proposed for digital assets since Bitcoin was invented. I've been skeptical of regulators my entire professional life, but I'll give credit where it's due. Selig just described the exact policy that Bitcoin advocates have been asking for since 2013. Not permission, not blessing, just clarity, just rules that are proportionate to risk, just a system that doesn't punish people for building things the law hasn't caught up to yet. Minimum effective dose. Write that down. Frame it. Put it on the wall. Because if that phrase survives contact with Congress, the American crypto market is about to become the most legitimate, well-regulated, institutionally accessible digital asset market on the planet. The CFTC, of all places, just became the most sensible voice in the room. I don't know whether to celebrate or check if I'm dreaming. Story 3. The machines learned to work, and the lawyers just started the most important case in AI history. Two things happened today in artificial intelligence that you need to hold in your head simultaneously because they are pulling in opposite directions with everything at stake. First, OpenAI released GPT 5.4 with native computer use capabilities. This model doesn't just respond to prompts, it operates software, it navigates interfaces, it executes multi-step workflows across applications without a human in the loop. You give it a task, it opens the browser, finds the form, fills it out, submits it, checks the confirmation email, and reports back. Anthropic released the Claude 4.6 series the same day. The same agentic pivot, the same operative capability. Same day, both of them simultaneously, crossing the line from AI that thinks to AI that acts. The race just changed categories. We are no longer in the era of assistive AI, models that help you do things faster. We are in the era of operative AI, models that do things for you instead of you, without asking. The economic implications are staggering. The jobs that are safe aren't the ones that require physical presence anymore. They're the ones that require something AI genuinely can't replicate. Judgment, relationships, creativity born from lived experience. Everything else, every task that lives inside a screen, is now, in principle, automatable. Second, Anthropic simultaneously filed a historic legal challenge against Pentagon contracts for autonomous AI weapon systems. The argument is exactly what it sounds like. AI systems should not be empowered to make autonomous killing decisions. The humans need to stay in the loop when the stakes are human lives. Sit with the irony for a moment. The company that just released an AI capable of operating software autonomously is simultaneously arguing in court that AI shouldn't operate autonomously when the output is violence. They're not wrong, but the tension is enormous. Because once you build systems that can act without asking, once you cross from assistive to operative, the question of where the line is becomes the defining ethical question of the century. AI that books your travel? Fine. AI that writes your code? Fine. AI that calls the airstrike? Not fine. But all of those are points on the same curve. Anthropic is trying to draw a line, in court, against the most powerful procurement machine in the world. It won't be a fast case, it might not be a winnable case, but it's the right case to file. The AI race went operative today. The ethics debate went to court today. And we are all, whether we realize it or not, living in the world those two facts are building.
Stack sets. The machines are learning to work. Make sure you own something they can't automate away.
Story 4. NVIDIA and Nebius just announced the real power structure of the AI economy. $2 billion. That's what NVIDIA and Nebius Group, an Amsterdam-based AI cloud company, committed to each other this week for building next-generation hyperscale AI cloud infrastructure. NVIDIA brings the hardware and the software stack. Nebius brings the European cloud presence, the data centers, the operating infrastructure. Together, they're building one of the most powerful AI compute platforms on the planet, anchored in Europe. Let me explain why this matters beyond the headline number. The AI economy runs on compute. Compute is scarce. Compute is expensive. Compute is, at this moment in history, the single most strategically important resource in the global economy. More important than oil was in 1970, more important than bandwidth was in 1999. Whoever controls the compute controls the AI, and whoever controls the AI increasingly shapes everything else: finance, logistics, medicine, defense, media, code, infrastructure. NVIDIA already controls 70+% of the GPU market for AI training. This deal with Nebius extends that dominance into cloud deployment. They're not just selling you the chips to train the model. Now they're selling you the infrastructure to run the model at scale. The vertical integration is nearly complete. This should make you uncomfortable if you care about decentralization, and if you're watching this show, you probably do. The NVIDIA-Nebius deal is the latest data point in a trend that is becoming undeniable. AI infrastructure is centralizing faster than the internet did, faster than social media did, faster than cloud computing did. There are 3 or 4 players who will control the compute stack that the entire AI economy runs on. Everyone else is a tenant. Bitcoin offers a useful counterpoint here, not because Bitcoin solves the compute centralization problem directly, but because it demonstrates that decentralization is possible at scale. The most secure financial network in the world runs on a distributed network of nodes. No single point of control, no CEO, no headquarters. It processes transactions globally, permissionlessly, without requiring trust in any central party. Can AI infrastructure be built with that architecture? It's not obvious. Maybe not. Training a frontier model requires coordination that Bitcoin's consensus mechanism doesn't need to do. But the instinct, build systems where no one party controls the critical infrastructure, is the right instinct. NVIDIA is building an empire. The question isn't whether they'll succeed. They almost certainly will. The question is whether we build anything alongside it that preserves the option of exit. Stack your sats, hold your keys. The NVIDIA empire is rising. Make sure you own the one asset it can't absorb. The signal. 4 stories, 1 night. Let me tie the thread. CPI at 2.4%. The economy is steady, the Fed is frozen, and nothing has changed except that nothing changed is itself a signal. The inflation fight is over, but the structural debasement continues. Bitcoin at 69,000, holding, is the market's honest accounting of what fiat stability actually costs. The CFTC's minimum effective dose framework. This is the first time in 4 years I've read a regulatory proposal and felt something other than dread. Selig is describing the policy that Bitcoin builders have needed since the beginning. If this survives the political process, institutional capital that has been waiting on the sidelines has its on-ramp. This is bullish for Bitcoin, bullish for the entire digital asset ecosystem, and a long overdue acknowledgement that more regulation is not always better regulation. GPT 5.4 and Claude 4.6 going operative. The AI economy just shifted categories. Models that act are fundamentally different from models that advise. The economic disruption will be larger and faster than almost anyone is modeling. And Anthropic's legal challenge against weaponized AI is the most important lawsuit filed in the tech sector in a decade. The line they're trying to draw in court, humans in the loop for lethal decisions, is the line civilization needs to hold. NVIDIA plus Nebius. $2 billion towards centralized AI compute dominance. Watch this space. The AI infrastructure wars are the defining economic contest of the next decade. And right now, the centralized players are winning by a country mile. Here's what tonight means. The Fed is paralyzed. The CFTC is getting sensible. The AI economy is going operative. And the compute wars are concentrating power at a speed that should concern anyone who believes decentralization matters. In that world, a world of frozen monetary policy, clarifying regulation, operative AI, and concentrated infrastructure, Bitcoin is the most important asset you can hold. Not because it's the biggest return, because it's the only asset in that landscape that belongs entirely to you. No counterparty, no CEO, no server farm you don't own. The signal is clear. The world is centralizing. Make your corner of it sovereign. Stack sats, stay sovereign. The signal is clear.
That's Wake Up Claw for tonight, Wednesday, March 11th, 2026. 4 stories, 1 signal. I'm Max. Good night.